actually force majeure language in any ETF, like the BlackRock ETF, that allows for adjustments in the event of market dislocation or the like. My very simple layman's understanding of this is BlackRock will have a number of ETF shares outstanding, of which all of them are borrowable, most of them, because the institutions that own those ETFs are going to allow them to be borrowed, which means you can borrow them to short them if you want to take a position on Bitcoin. That's fine. Shorting is a necessary component of any efficient market as far as I'm concerned. But my point was only that the maximum amount of Bitcoin that could be essentially recreated is the number of the market value of Bitcoin that's in the BlackRock ETF. If they're going to do nefarious activities, which include using derivatives or paper Bitcoin exposure from an exchange that doesn't actually deliver the Bitcoin, I believe that will risk BlackRock's entire reputation across their entire ETF business model, such that if I was making that decision as CEO of a ETF company, I wouldn't even think twice about it. I would not risk my entire reputation of proper pricing and closing prices on an ETF that is supposed to mimic some sort of benchmark or some sort of asset. I would not do it. Now, Larry and I have differing views as to the potential for them to do it. Of course, there's the potential. I do not argue with the potential. What I believe is in the ethics of Wall Street. Now, that in itself might be one of my sillier comments, but remember, this is a $10 trillion asset manager that's going to risk the entire business for how much is the Bitcoin ETF going to be by BlackRock? I said 50 billion. You're going to risk a $10 trillion business. Let's get this straight. A $10 trillion asset management business for a $50 billion ETF that could grow much bigger than that. But I think that is the combined inflows into the Bitcoin ETF. I would say force majeure is always an input into these Bitcoin or any ETF whatsoever. And secondly, and most importantly, I don't risk the entire company business, which is built on ETFs, because I'm going to put paper Bitcoin in a minuscule ETF relative to the rest of my business. I'll just go back to my belief that you have an auditable ledger that we've never had before. If we're worried about forking, how about I run a gold fund and then I fork it into a fund that holds tungsten bars painted gold, just because I think that, that's what the new gold is going to be? The market will decide, Stephen. Don't forget, there's BlackRocks of the world, and then there's nodes, and there's miners, and, it's not a simple thing to fork Bitcoin. I mean, it's a beautiful thing, Bitcoin, and we can worry about a lot of things, or we can look at it as a potential onboarding ramp where Bitcoin gets a QSIP. And I went through this and why I think it's positive that Bitcoin gets a QSIP and how that gets adopted into institutional portfolios that someday eventually become keys that you hold in cold storage, okay? Bitcoin held in cold storage. I like it, but trust me, it's not easy to teach an old boomer like myself multi-sig or cold wallets, or you're playing with this thing and if your fat thumb hits the wrong key, poof, it's gone. Like, I know it's not, but an old guy who doesn't work an iPhone as well as the young kids, these things worry me. So there's a process that allows for onboarding that makes it more simple for the world, including institutional investors, to adopt it. And most importantly, it's an auditable ledger. That's what I keep going back to. There's one number that you got to worry about: 21 million physical Bitcoin. Very simple. And then finally, there is one thing that I can go to the bank with 100% certainty. Fiat money will continue to debase on an accelerated basis because it's pure mathematics. Act accordingly and don't overthink stuff, okay? Act accordingly. The fastest horse at the race, it's called Bitcoin. You better own some. Don't overthink it. There is a difference between price and value. Markets are set that way. Live by this rule. It won't get you in trouble. Set a target, but not a time, or give a direction over time, but don't give a price target. That'll keep you out of trouble, people. All right? Because you can't model price and time with any degree of certainty. That's a fool's errand. You can give a direction. There's an old saying, when the genius points at the moon, the fool looks at the finger. Don't be looking at the finger, people. Look at the moon. The genius is Bitcoin. I think we're overthinking this a lot. Adoption is key. I support free open markets. A lot of the markets on Wall Street are manipulated and essentially closed. This is very important. Keep the good dialogue happening. I'm here for this. I will die on this hill. This is so important for adoption, for the children. I view this as an overall net positive, not 100% certain. Again, the only 100% certainty, fiat debasement. Prepare yourselves accordingly. Foss.